Welcome back. Time to look at accounting and bookkeeping. Student loan payments are back again. For a look at what that could mean to you and to the economy, here's Courtney Kincaid, President and CEO of the Indiana CPA Society.
This is Business, Equity, and Opportunities. Accounting and bookkeeping.
Student loan repayment is starting again after a several-year hiatus, which kind of puts borrowers in a tough spot. Some borrowers, right? In the past 3 years, we have had some significant inflation, and so there's some great concerns about adding an additional expense for employees or small business owners. As we talk about student loans and student loan repayment, there are some things that employers should keep in mind, and business owners and entrepreneurs, right? That there may be that additional financial squeeze on the market, but that's also something that might be happening with their employees. And so what can they do to be responsive? Student loan repayment is an interesting way, a different way to offer a benefit that looks at retention of employees. And so specifically there is Section 127, which talks about historically was employer assistance in helping someone continue their education. But as part of the COVID relief packages, there was a look at how that could apply also to student loan repayments. And so there is a certain amount per year that employers can contribute that is both beneficial to the employee and the employer. They get tax credit from the employer side, and it is not taxable income from the employee's side. So that's a really good way to be responsive. At the same time, there are different ways and creative ways that employers are considering repaying student loans on behalf of their employees. And these aren't significant contributions. The average contribution is $50 to $100 a month. But in the long term, when you're thinking about interest, it makes a significant difference. Being able to show your employees that, you can do that either through direct payments, always being cautious, of course, about how that might be affected in your tax structure and what the requirements would be there. Some employers are taking PTO and they're lumping PTO that might not have been used and saying, if you don't use your PTO, we'll pay you in cash, and you can apply that to your student loans. So there's all sorts of creative ways out there that they can do that. Always, though, being cognizant of tax implications and making sure that you're working with a CPA to make sure that you're meeting requirements and you're doing everything appropriately. And when you think about capturing that Section 127 benefit, there are certain requirements and eligibility rules around that a CPA can help with. As sometimes small business owners and entrepreneurs are considering going back to school, or have already taken some education, they might want to talk to their CPA about, how to think about the long-term implications of how that student loan was funded. And the ways that you can pay back loans are sometimes overwhelming to borrowers, and some of them are more advantageous than others. So talking to someone who understands that, a CPA who helps you, would be a good idea.